Hey guys, how's it going? It's Andy. I have the newest addition of my dividend investing portfolio, and unlike the dividend kings that I've been adding recently, this dividend stock is very attractive in a couple ways, and it is attractive as a recession-proof stock. It's had a huge increase to their dividend recently, and I'm going to lay out all the reasons why I like Home Depot, ticker symbol HD, for a long-term investment, also to be a part of my dividend investing portfolio. This video is going to be broken down into three main parts. The first, I'm going to talk about the attractive parts about Home Depot, why I like it for a long-term investment, and some of the talking points that I would give to someone when they ask, why would you invest in something like a Home Depot in the current climate? Then we're going to talk about some areas of concern and my responses to them, because I think from my video talking about the biases associated with investing, I think it's really important to talk about some of the negatives associated with stocks, because not every stock, I guess almost all stocks, aren't perfect. You have flaws that people can talk about. I'm going to talk about some of the negatives that I see about Home Depot and give my responses to them and why I think that it's not a big deal, or if I think it's actually a justified concern. And then finally, I'm going to talk about the current state of the housing market and the expected increase in interest rates and what I think it's going to mean to Home Depot going forward. So let's talk about the attractive parts about Home Depot. Being a part of my dividend portfolio, obviously it does pay out a dividend. Currently, the dividend yield is sitting around 2.11%, which is pretty on par for many of the other dividend stocks that I have in my portfolio. I think right now my yield for my portfolio is sitting around like 2.3%, so it's decent. They've increased their dividend for the past 13 years, which is not as high as some of the dividend kings that I talked about in my previous video, which I'll link above right now. And the reason behind that is their dividend payout stalled during the housing crisis. So for around 3 years, they did not increase their dividend payout, which means that they were disqualified from being a dividend aristocrat or being a dividend king. But the really attractive thing is their dividend growth. So on this graphic, it shows the 3-year dividend growth of 60%. It has a dividend payout ratio of 44%, meaning that their dividend payout, which is currently sitting at $6.60, and I'll talk about why that was recently increased. So $6.60 annually is 44% of their total earnings per share, which is a incredibly healthy range. I think anything below 65% is very healthy, so a 44% dividend payout ratio, very healthy. Let's talk about how it's done in the past, because I thought Home Depot would have really suffered during the housing crisis. Obviously, Home Depot, home improvement, you feel like they'd go hand in hand, but when I really look at the charts, the graphic that I'm putting up right now is how the stock market has done from 2007 up until 2013, because I want to see how Home Depot reacted during the previous recession that was associated with the housing market, and then see how it recovered. Because for long-term investments, I think it's very important to figure out how they do during poor moments in the overall market, and then I want to see them bounce back faster than the overall market. As you can see, Home Depot, which is in the orange, which is very fitting, fell earlier than the S&P 500. This makes sense. Housing was one of the huge catalysts that started that recession and that bear market. But as you can see, 2011, it really took off. During this time, the S&P 500 was up 9.5%. Home Depot was up 110%. So this is the reason why I think Home Depot is so attractive right now. It has a decent dividend payout of sitting at just above 2%, but it has outperformed the S&P 500 for a decent amount of time, even during the previous housing crisis, which you would think that Home Depot would really suffer during. But I think the really exciting part about Home Depot when it comes to their dividend is their rate that they've increased the dividend recently. From the last earnings report, which I'll talk about a little bit, they approved a 15% increase to its quarterly dividend, bringing it up to $7.60 per share. This is the 140th consecutive quarter that the company has paid a cash dividend. And when you take that annual payout of $7.60 and put it on the current price, which is how you calculate forward dividend yield, it gives a dividend yield of 2.4%, which is very nice. So as I mentioned, Home Depot has been very aggressive at raising their dividend, but based off of the payout ratio still sitting below 45%, this is a justified increase in their dividend payout. So in the past 3 years, their dividend growth has gone up 17%, 5 years, 19.4%, 10 years, it's at 20.6%, and then in the past 20 years, they've increased their dividend 19.5% annually. So this is incredible dividend growth. Even though the dividend yield isn't super high, the reason that this makes sense is that the stock price has gone up significantly over the past 5, 10, 20 years. So right now, Home Depot is down 22% year to date. This makes sense with the overall sell-off in just the broader market. In the past 5 years, Home Depot is up 114%. So even with this recent decline, it has still done incredibly well in the past 5 years. So this is a dividend stock that I like, not only for the dividend and the aggressive dividend increase that they've had, but also just for a growth stock. This is a company that's done incredibly well in the past 5 years. When you compare it to the S&P 500 since 1995, on this channel, I always pick stocks that have outperformed the S&P 500 since 1995. I picked 1995 because it gives a good variety of market conditions. You have the dot-com bubble, you have the housing crisis, and then you have the pandemic-related crash and recovery that resulted in the shortest bear market in the history of the stock market. During that time, Home Depot, on an average annual total return, has had 15.94% compared to 9.88%. This is with dividend reinvesting, and obviously that is a pretty significant outperformance. So Home Depot checks that box. And then another positive, in May of 2021, they announced that they'd have a $20 billion share repurchase. So whenever you buy back shares, it removes the amount of outstanding shares, and as a result, share price is going to go up. So that's always seen as a positive. Selling shares and having a share offering is good for growing stocks that need to raise capital, but buying back shares for a larger, more well-established company like Home Depot, always a positive thing to see. So let's talk about some of the negatives, because there's no perfect stock and every company has some negatives that we need to talk about. For Home Depot, the main discussion is the impact of the pandemic on growth. So with the pandemic-fueled home improvement projects, Home Depot sales grew by $40 billion over the past 2 years. That's roughly the same amount of total sales growth the company reported from 2009 to 2018. This makes sense. People were spending way more time at home. Interest rates are very low, so they're able to borrow money and improve their house. And the housing market has just gone crazy, so it's been a huge incentive for people to spend money on improving their houses. And then they've had some outlook problems. From the last quarter, they issued conservative growth outlook that likely incorporates several headwinds that could impact the business in 2022. Sales will be roughly flat, management said, after rising 14% last year and jumping 20% in 2020. This is actually okay to me. When you see the incredible rise in sales over the past 2 years, being able to stay relatively flat on that shows that they're still in a good spot, and it's not something like a pandemic-related stock like Peloton that did incredibly well as people were staying at home, but as the pandemic has tapered off slightly, that demand has gone down. Demand has stayed at that elevated rate and has not dipped, and I think that's actually not a bad thing. This is one of the main reasons why Home Depot was down around 10% when this earnings came out. I don't see it as big of a problem as some other people do. So the main focus from that earnings report is that they're trying to focus on the professional. Home Depot has always been known as something like, oh, a tool breaks, you go to Home Depot, you buy an individual tool, you buy some lumber. But they're trying to invest in their supply chain to take advantage of the professionals, the companies that are doing large amounts of sales and are going to be buying lots of stuff. So they're planning a 5-year plan to invest $1.2 billion in its supply chain, including the ongoing construction of larger facilities called flatbed distribution centers that can store and deliver large orders. It built the first one in Dallas and plans to eventually open 40 of them across U.S. major markets. This is good because, from what I could see, the amount of stock that they keep in their store is not sufficient for some of these larger projects, and so being able to push it away from the normal stores and being able to have more of a control over the distribution centers, always positive. Then another worry was the margin worries. This is talks about inflation, interest rates may be hindering some of their growth metrics, which is what people look at with margin. So this graphic that I put up right now has revenue on the top, net income in the middle, and on the bottom you're going to have net margin. As you can see, net margin has steadily increased over time, but there's some worries that home improvement sales cooling in 2022 as rising mortgage rates threaten to hit housing demand and prices, potentially making customers less likely to invest in their homes. There's a lot of uncertainty on the future, and that's why we're going to go into number 3, talking about the future of the housing market. Uncertainty, the huge thing with Home Depot right now. You have the pandemic impact. There was more people spending time at home, low interest rates, high housing prices, incentivized home improvement. Is that going to change? Is there going to be a bubble? How are people going to be spending as interest rates go up? Are they going to push off the home improvement projects that they've been planning, or are they going to be trying to do it themselves as some of the expenses are going to be cheaper to do it yourself instead of paying someone? We'll have to see that. There's been some discussions as Home Depot as being a recession-proof stock. This has been seen in the past, as I showed with that graphic, that while you had the original sell-off with the housing crisis, Home Depot bounced back extremely well. So there's some debate on Home Depot as being a recession-proof stock. If we do see another housing bubble, we'll see what happens. That's some of the uncertainty going forward. And then the margins, that's really what spooked the market. Higher inflation. Some costs are being pushed to consumers, but that's likely going to hit their bottom line, and margins could suffer. We'll see how much the market really cares about that. So in summary, let's talk about the positives. You've had huge dividend increases recently. Their dividend yield is still sitting around 2.1%, and then the forward dividend yield based off the dividend increase at 2.4%. It's not going to blow you out of the water, and it's not a dividend aristocrat or king because they had to pause their dividend growth during the housing crisis. But over the past 3, 5, 10, and 20 years, you've seen more than 17% dividend growth. That's extremely impressive to see, and it's kept up with the incredible rise in stock price that we've seen. We've seen a huge emphasis on home improvement since the pandemic started. We'll see if that starts to taper off as people are no longer working as much from home, and you have some of the problems with interest rates and inflation. So we'll have to see that. Also, the fact that it's outperformed the S&P 500 by a pretty significant margin since 1995, being up 15.94% compared to 9.88. Then some of the negatives, you have uncertainty with the housing market. Do we have a bubble coming? We'll see how that affects companies like Lowe's and Home Depot with the home improvement market. And then we're going to have increases to interest rates. It's going to be more expensive to borrow money and do home improvement projects. So we'll see if that's going to push people away from the professional contracts and companies that are doing these large scale buildings, or it's going to push people to do more of their own types of projects. We'll have to see. Inflation is the name of the game right now. We're really not sure how that's going to impact margins, how it's going to impact the consumer spending. Just some of the uncertainty behind the market is going to really impact Home Depot going forward. But overall, you see the dividend growth, you see the track record. I think Home Depot has a reason to be included in my portfolio, and I'm going to be buying more this week. If the market continues to fall, Home Depot continues to be attractive. With the recent sell-off in 2022, I think it's at a pretty significant discount compared to the track record that we've seen, and some of the messaging that we got from the past earnings report with the huge increase in the dividend payout. Even though you have some of the worries about the margin, I saw a lot of positives coming out from Home Depot, and that's why it's the newest addition to my dividend investing portfolio. Let me know what you think about Home Depot and what you think about dividend stocks in general. Is there a dividend stock you'd like me to talk about in a future video? Be sure to let me know in the comment section down below. If you made it this far, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot, and I will see you in the next video. Thanks for watching.